Great. Well, Trent, thank you so much for being on Winning the Home Game podcast. And I've been really excited to have you on because, being a lender myself, it's really, really interesting because a lot of clients ask me questions about, tax advantages or buying investment properties. So I'm really excited to have you talk today and also be a reference there if any of our clients would want to talk to you in the future or any of our listeners too.
Absolutely. Thank you so much for having me, Julie.
Thank you. All right, great. So first of all, Trent, you know, um, for listeners who may not know you yet, how did you get started in the industry?
Sure. Studied finance and accounting coming up through school. I would say even before that, I wanted to go an entrepreneurial path. My dad was a entrepreneur, physical therapist, started his own practice, had multiple locations, and uh, grew up at his office. Always wanted to be a business owner like dad. So, accounting was a foundation to that. Was my initial goal. I didn't think that I was going to uh, own a CPA firm or necessarily, be in the accounting business necessarily, but coming up through staff accountant roles and tax preparer roles and manager roles, I, quickly figured out that this is a skill that I could, parlay into being a business owner and being an entrepreneur. And so, took a while to get there. I started Trail CPA a little bit over 7 years ago, and about, about 12 years of experience prior to that. So, um, yeah, a variety of roles, and got to a point where working at a mid-sized firm after a few years, thought I was going to maybe be there a little bit longer, felt ready to jump and started Trail CPA with no clients and a lot of time and energy, and have been working hard on it ever since.
I love that. And today, how many team members do you have?
We're up to 20. So
Wow, wonderful.
20 team members. Yep. And I was just myself for the first 2 years. Brought on a business partner whom I worked with at two previous stops. So this is our third together, which was the best decision possible. And yeah, ever since he came on, we continue to grow and add from there. So.
Okay. I love it. Love it. Thank you. All right, so let's get right into it. So when is the right time for someone to start actually working with somebody like you, a CPA? Is it after they bought a home, started investing, or even earlier? What's your take on that?
Yeah, my take is that working with a CPA who does tax planning, like we do as part of our fixed rate, we want to have some complexity. So sometimes it could be one event, starting a business, buying a rental property, of course, buying a primary residence. It could be complexity in compensation, such as options through your employer or RSUs. There's unique engagements when it comes to comp that we get involved with planning. So either a combination of several smaller complexities or maybe one big one, which would prompt, I would believe, to reach out to a CPA who does tax planning, which I feel like we're unique that we include tax planning in all of our engagements. Not all CPAs do that. A lot of the times it's a kind of an upsell or an add-on service. And so we believe that, the clients we work with, it brings a lot of value. So we are excited to include that with all of our engagements, and yeah, we're especially
I
good.
love that. So does that mean that you're not just there to get their taxes done, you're going to help them put a plan together?
That's correct. Yeah,
Okay.
we have a deliverable tax plan for all of our clients, no matter how big or small. Our bigger clients, we typically are going to be having more tax planning meetings, and we build that into our fixed rate engagements. But smaller clients, it's typically a 30-minute tax planning meeting, which around this time of year we are doing after tax season and building those plans out. So whether it be some homeowner, we're talking about Schedule A and itemized deductions, or rental properties and strategies around those. Withholding. I could go on and on. We've got hundreds of
Right.
topics on
Right.
our templates when it comes to planning. So, um, yeah, that's how we approach it.
Great. So I work with a ton of first-time home buyers here in Seattle and the greater Seattle area. So, and the clients that come to me, they have no idea, of course they don't know what it's like to buy a home financially, but I educate them and do all that. But, for someone thinking about buying their first home, what should they be doing financially right now to prepare?
Sure. Well, we help a lot of small business owners prepare for buying a home. It's a little bit more complex than a W-2, and underwriting, as you know, is a little more difficult. And so we're working a little closer with our small business clients. It's a big niche for us, is small business. So independent contractors, consultants, maybe just business owners. And so typically you're going to need a couple years of tax returns, depending. And, that's typically what we see. They want to see 2 years of history there. And so that tax return, we actually typically recommend to reach out to someone like you, Julie, ahead of time to see, well, what's the range of what they can qualify for based off adjusted gross income and taxable income. And so, we're assisting with that. And that goes all the way down to, well, building out a budget to get your business to a certain point where you can, and then of course, achieving that budget and that goal so that you can qualify for the home that you're looking for. And so we're helping clients there. For, W-2s, similar qualification is important, and the tax return is a big input into that. Timing is a big deal. So sometimes people are looking to close, really early in tax season. Well, we need to get prepared for that and be organized and ready to file when the IRS opens. So we've got a couple projects there as well. So I think it goes to planning. So given that we include tax planning, we're asking our clients about, are they buying a home? Are they buying a rental property? It's a piece of the puzzle. So
Great. I love that. All comes down to tax planning, it sounds like.
correct. Yeah, I believe we bring so much value with the planning.
Right.
Of course, accurate preparation and compliant preparation, and then also somebody in your corner if the IRS asks any questions.
Yeah.
A ton of value to that as well. But we really lean into that planning piece and making sure that our clients are
Right.
set up. So.
Love that. Okay. So from your perspective, like what does a healthy financial profile look like, before buying a home?
Sure. Yeah. Well, I'll go back to, qualifying and making sure that you can afford the home that you're going to purchase.
Mhm.
Budgeting is important, and making sure that you're comfortable with the payment and kind of regardless if you qualify or not. I think that is a healthy approach to buying a home. I think understanding the tax savings is a big piece. I think,
Okay.
sometimes that can be ignored and not really
Okay.
understood, maybe is a better way to say
Right.
it. And so we help our clients with that and understanding, okay, well, what is my, you know, what is my, commitment to this home financially between paying down principal and appreciation of the home, and then also the tax benefit, perhaps generating a refund or lowering your tax due. I think those are all important things to know when buying a first home. So,
Great. And the next question is perfect from what you just said. So what tax benefits come with owning a home for first time buyers? And what should they
sure.
understand?
Yeah. So itemized deductions is going to be a big one. So there are a few, but the deduction of your mortgage interest. So that's not going to be your entire mortgage payment because you're going to have principal pay down and your escrow for insurance and property tax. Although property tax is the next one that is deductible. There have been some changes to tax law since the July updates, and so there's an increase on state and local taxes cap as far as how much you can deduct. Previously, since 2017, it was 10,000 that was allowable. And we've got plenty of clients that have been, beyond that threshold and just not been able to deduct additionally.
You're
Uh,
talking about the real estate property taxes, correct?
that's correct.
Okay.
Yes. So
Got it.
for that home that they purchased, that property tax is deductible, at least it was up to 10,000. That got moved up to 40,000 in July. And
Wow.
so we saw a lot of clients benefit from that, especially with higher property taxes, with some of the more expensive homes in the area. And so there is an income limit on that would then phases back down to 10,000. So you want to keep an eye on that. There can be some tax planning around where we get your taxable income. And there are some, dials and levers on your tax return that are, available that we can look at to, it may be worth to qualify. Perhaps additional retirement contribution so that you get under that threshold and you're really getting a very efficient tax return from that. So we've seen that benefit. So to go back to your question, mortgage interest deduction, property tax deduction. It also will open up your Schedule A, your itemized deduction schedule in a lot of cases where all of a sudden you can then take advantage of non-cash donations, cash donations. Medical deductions are tougher to get because there's a hurdle of 7.5% of your adjusted gross income. But It's
Wow.
also possible to get that investment interest, sales tax, which can be itemized, or you just use the general sales tax rate based off of your income. And so all of those deductions would lower your taxable income and provide a benefit. And so how we analyze that is, well, we'll take all these deductions. What does it come down to tax savings? Deductions are great, but I believe talking in just pure, how much is this going to save you on tax terms is the easiest to understand. And that's how we translate it for our clients.
Right. Love that. So, how can buyers plan so there are no surprises at tax time after they purchase a home?
Sure. Uh, Organization. So we start there, and it's part of all of our planning. So know what documents to expect. So 1098-INT, that's going to come from your mortgage company. It's going to display your mortgage interest. Your property tax will be detailed on there. Your insurance. We want to keep an eye out for that form. I also recommend sending over the purchase agreement. So your HUD statement, PSA, whatever you'd like to call it, but we'd like to have that on file as well. So we want to make sure that we're supporting your cost basis in the home. I would also say on the theme of organization, just any improvements that you made to the property are
Okay.
additions to basis when you eventually sell this property. And so definitely want to keep those well documented and supported. So receipts, statements from contractors. We've had a couple cases where someone's owned a home for 30 years and, oh gosh, I've got a lot of improvements. Well, you can't take those deductions without support. And so you want to make sure that you're organized. We have an upload portal for our clients, and we've got a folder for those improvements. And so we just recommend throwing them in the folder and forgetting about it. We'll keep it
That's
archived.
so great. I love that idea rather than me having to save it myself.
Yeah, don't worry about it. Add it to our portal. We'll have it forever. It's backed up, and no need to create a spreadsheet or add anything up. We'll have it in there. We'll take care of it from
Right.
that point. So a lot of times the master statements from general contractors are best versus having dozens of invoices from subcontractors and
Okay.
materials and things like that. So yeah, that's a big one. I think on your previous question too, I skipped over primary residence capital gain exclusion, which
Oh, yes.
is a big tax saver. So as long as you've lived in a home, your primary residence for 2 years, you qualify for an exclusion on the sale of up to 500,000 for a joint filer, and then 250,000 for a single filer or head of household filer. And so, that's another big tax saver and something else that may not be top of mind when you purchase the home, but
Mhm.
especially when you're exiting a home. There are some reasons to qualify for, say, like a partial if you do move out before the 2 year mark. But as long as you're there for 2 years, you'll be able to qualify for the exclusion on gains, which is a big one. Another thing you can
So,
deduct is selling costs, and
mhm.
then also those improvements. And so,
Right. So that I always hear 2 of the last 5 years. Where does that 5 years come into play?
yeah. So it's the 2-5 rule. You're definitely right on that. As long as you lived in the property for 2 of the past 5 years. And so we'll see it too, where someone will convert their primary residence after, say, 2 years to a rental for a
Okay.
couple of years. Well, a lot of the time it's this decision time coming up to that 5th year since your original purchase. If you want to sell and take advantage of that primary residence capital gain exclusion, or if you want to hold on to it, maybe it's a good
Right.
rental and it's worthwhile. So we'll help our clients analyze that as well, and give them our recommendation
Right.
on how we would play it. And then rentals can open up a whole nother conversation around 1031 exchanges and deferring taxes. And we help a lot of clients with that as well.
Right. So if it's 2 of so if they, rent it out, it's actually a great time for them because they can test the waters. Do they wanna be landlords? Do they wanna sell it? So that 5 years helps them out, the 2 of the
That's
5 years.
right.
Is that correct? Okay.
Absolutely.
Okay.
Yes.
Love
Yep.
it. Okay, great. So, a little fun question to break it up a bit. So, you deal with money all the time, right? So what is one money tip you live by?
So, it's going to sound very cliche accountant, but I think, budgeting. And then also my strategy is I invest before I spend. And so that's part of the
Mhm.
budget that I
Right.
build. I don't think it's my wife's favorite conversation is budgeting, but that is when I live by it. It's done well for us.
Right.
And so, it doesn't need to be the most specific budget. I think
Mhm.
a general budget and a strategy for money, and
Mhm.
just being, cognizant of it,
Right.
pays dividends, to use a cliche. So
Right.
yeah,
Just know where your money's going and know what your nut is, right? I think that's really, really important too.
absolutely. Yep. I
Okay. All right. So once someone becomes a homeowner, what's one financial move they can make early on that sets them up for, long-term success?
Yeah. So of course the tax benefits, I believe that that's a big deal. So that should absolutely help with
Mhm.
cash flow and lowering your tax liability. Let's see other ways to set your success. Well, I mean, how I look at a home too is it's definitely an investment, and so being aware of how that investment is moving through appreciation, the tax savings, of course, we've talked about, your payment staying consistent. I believe that that's a big deal, especially as you budget year over year and you see other expenses going up. Well, your payment is going to stay consistent. So I think there's a ton of value there. So, thinking of your home as an investment and understanding what your returns are, and I think that's a key piece.
Mhm. Love that. What are some tax strategies homeowners can use if they want to start building a real estate portfolio? And I'll just start
Mhm.
by saying, I have clients that don't realize this, but when you buy a home as your primary residence, the interest rate is much lower because you're going to be living in the property rather than buying a property, as an investment property. You're going to have to put more money down and the interest rate is higher because there's more risk because you're not moving into it.
Yeah.
So a hack that a lot of people don't realize is when you buy a primary residence, you only actually have to live there for 12 months. You're promising, I'm going to make this my primary residence for 12 months. After that, you can go ahead and rent it out and, start making money. And then you can either rent again or you can hopefully buy another home with that. But I have, some clients realize this, but some clients don't. So I just wanted to point that out there.
Yeah, I mean, it's a great strategy. Like you said, you put less down and you get
Mhm.
a more favorable rate. I've done it twice. I have two rental properties because of it. I
Mhm.
uh, did not go out thinking, trying to be a real estate investor and gather properties, but initially was a one bedroom condo in Arizona. Great property, great location, great rental, and I wanted to hold on to it. I believe I put 10% down initially on that one. I then, when I moved up to Washington, rented for a little while and then bought a townhome on a professional loan, which was offered to attorneys, doctors, and they put CPAs in there as well. And so I qualified for this loan where I put zero down. I had no
Wow.
PMI and I got an okay rate. It wasn't a great rate necessarily, but the other benefits of not having to put a down payment and not having PMI, amazing. And then I refied on that one when rates drop down. And so, the low threes on that. And that's been a great rental as well. So very happy with both of those. And so, like
Yeah.
you said, I bought those. I lived in them for over 12 months, of course, even, longer in both situations, but was able to add a couple of rentals and, I'm pretty lucky on, how well they've done. So,
That's great. You still have them?
yeah,
Oh, that's great. I love it. Long term there. I like it.
that's correct. Yep.
Okay, so what should someone know from a tax standpoint if they're thinking about renting out, part of their home or using it as an Airbnb?
Sure. Yeah. So I'll start with the Airbnb. There's definitely some favorable tax law around short-term rentals for owners who materially participate. And so really the function there is being able to take active losses against your W-2 or self-employment income or investment income. And so we've seen a big uptick in that in the past few years. Also with the tax changes in July, bringing back 100% bonus depreciation. We're seeing an uptick in cost segregations, accelerated depreciation on the buildings that you own in a short-term rental that you materially participate in, and being able to, offset a lot of active income and a lot of scenarios providing for W-2 employees, typically a large refund to help offset, down payments that you put down on properties. So big piece of tax planning, whether it be with clients that already have investment properties or clients that are looking for properties. What are the strategies we can build to help them better make a decision around this investment? So,
I love it. And what about renting out part of their home?
yeah, we see that too. Yeah. So like ADUs, basements,
Mhm.
we see the same, you know, it's a similar function to owning a property outside of your primary.
Mhm.
You know, things to know, like, you know, staying organized is a big one. So, you know, keep those costs together. I would, you know, I personally recommend an LLC for, you know, for liability protection. That's more
Right.
an attorney will help you set that up, not a CPA, but we do see a lot of clients go that route. Yeah, keeping those expenses organized so that it's easy come tax time is wonderful. And then also just understanding the P&L around that, which we help our clients better understand when it comes to, you know, why this is a tax efficient investment. So,
Mhm. And this might be a dumb question, but is there an advantage to renting out a room in your home? Tax advantage?
uh, you know, there's it just as much as any other rental real estate. So there's not any special treatment for renting out a room versus renting out, say, half your home if you have, say, like a
Okay.
duplex. So it just expenses just get prorated. So
Mhm.
maybe slightly more complicated from an accounting perspective, but we just need
Yeah.
to slice up utility bills and, you know,
Mhm.
all of those items that go into the cost. Of course, the depreciation of the building would be based off the square footage
Mhm.
that's usable for your tenants. So, as long as we lay a little bit of groundwork there and then create a model to, you know, calculate it, then that's it.
Got it. Okay, great. How can buying a home play a role in someone's long-term financial plan?
Sure. Well, I mean, there's a lot of statistics around the benefits and the, you know, wealth accumulation from, you know,
Mhm.
buying a home. And so, yeah, I think you can lean on some of those statistics. You can lean on the consistency of the payment. You can lean on the tax advantages as well of owning a home versus renting. But you know, I'm sure there's situations also where renting makes sense. Not saying that it's like you know, completely uniform advice for
Sure.
everybody, but you know, if you can afford the payment and you understand the investment component that is a primary residence, I
Mhm.
believe there's an argument where it makes sense a lot of the time. So
Right. Yes. Yes. And the clients that come to me and say, Julie, I'm here at Amazon for a couple years. I want to buy a home. I'm like, wait, let's talk about this. Maybe it makes more sense to rent because you have to make sure that your return on your investment, is there because there'll be a lot of closing costs, excise tax and things like that they have to pay. So you're right. Like it doesn't necessarily make sense to buy always for sure. Okay.
agreed. I definitely agree with that perspective.
Okay, I have one last question for you. So, from an amazing CPA, if you could give for a first-time home buyer one piece of financial advice before they buy a home, what would that be?
Let's see. Pick one. I would say, man, I've said it over and over on this, but make sure that you understand the cost of home ownership and make sure that you build that into your plan. So definitely, you know, earmark some expenses for repairs that you didn't have. Make sure that you account for the tax savings and the benefits that you're going to get on your tax return.
Mm.
I would say, you know, again, a theme apparently for this episode would be planning. If you have a
Right.
CPA, talk to your CPA beforehand,
Okay.
and yeah, make sure you know exactly what you're getting into for a first time. I know when I was buying a property for the first time, there's a lot of anxiety around that. So talk to professionals like Julie and your accountant and perhaps financial advisor or planner, and make sure that you feel very comfortable with that decision and understand it. And so it doesn't take
Yeah.
so much time to do, but I think definitely pays off. And you know, I wish I had resources like that when I was buying my first home.
Right. And you don't really hear that a lot. You mostly hear about, talk to your lender, talk to your financial advisor. But talking to a CPA, I think is really important to know what your deductions could do. Like, how do you file to, make it towards your advantage? And then, especially if you're thinking about, buying rental properties or Airbnbs, I think whether it's the first time you're buying your first home or your first rental or your first Airbnb, should definitely talk to a CPA for sure.
Absolutely. Yeah. Primary makes a lot of sense to make sure I think that comfort and then also the
Right.
advantages. I would even say more so for
Mhm.
investment properties because in the eyes of the IRS, it's essentially a business. So
Right.
the deductions you could take advantage of, making sure that you're not overstepping the line and, you know, stepping out of compliance is important.
Mhm.
So I would say even more so on the investment side. A lot of the times too, investment properties are out of state. Like I mentioned, the one property I have is in Arizona. So I have an Arizona tax filing for that. So that can add some complexity to clients. So
Wonderful. So for clients who do you and your team serve? Like what areas or what states?
yeah, majority of our clients are Washington. So our main office is in Kirkland.
Okay.
My business partner operates out of Arizona. We also have satellite offices out of Chicago and in Pittsburgh. And so
Okay.
those are the areas that we service, but
Okay.
most clients, Washington, the demographics, small business is a big niche for us. We work with a lot of
How
clients in
about real estate agents?
a lot of real estate agents, a lot of real estate
Great.
agents. Yes.
Okay.
Anyone paid in 1099, contractors. Of course, when you can get tax structure, self-employed retirement, business deductions,
Hmm.
estimated payments, the complexity definitely drives up when you're self-employed. And so those are great clients for us. Also in real estate. So of course, investors. So individuals who are investing in real estate, multiple properties, multiple states. Those are great clients for us. We bring a ton of value there with the planning. We work with a lot of general contractors, subcontractors, developers. So real estate is a big niche that we love.
Yeah.
And then also, that we call it the tech W-2. So, more complex compensation structures through private businesses, through the big businesses in the area, Amazon, Google, Microsoft, Meta, a
Great.
lot of clients in that space that we help with. And so, especially instead of stock options, those get complicated with
Right.
alternative minimum tax. Private companies like SpaceX, we have a lot of clients that work there, and it's a lot of fun complexity that we can help with. So
I love it. Great. Well, we'll put all your information on the podcast. And if somebody wanted to go to your website, what's your website?
trailcpa.com. And
Okay.
we have a scheduling link on there. It goes right to my calendar. We do a 15-minute complimentary intro with anybody that is interested so we can evaluate if you'd be a good fit or not. And then
Okay.
also just foreshadow to, what we would do with planning, what areas that stick out. And would love to meet with you.
Wonderful. Well, thank you so much. This was so great. And I'm sure you're going to help a lot of people. And I think this will open up, a lot of eyes and ears to, what's really important and just to be, I think the one thing I heard the most is be organized. And I love that you have, in your system, we can just upload our receipts. I think that's killer.
I appreciate
Okay.
that. Well,
All
thank
right.
you so much,
Wonderful.
Julie.
Thank you,
Really
Trent.
appreciate it.
My pleasure. Thanks so much.